Okay. We're back with another pre-market live stream. I hope you lot can hear me perfectly fine. Let me just do a couple of tests. Alright, so we're back with another pre-market live stream. Alright, perfect. So we're back with another pre-market live stream. We're just gonna go through our usual market. Let's go to trade seller. I'm gonna do it like this. So what we usually do here, we start our day with a pre-market analysis. So what we're gonna do is I'm just gonna get ready for my pre-market, and this is what we do every session. We want to know how we're gonna get into the markets. We want to know what the bias is. So I've got a pre-market template that we usually work through, and that's in my notes section. So we just copy and paste that over. We can get started with our pre-market analysis. So we'll edit this as we go along. Let's just take a look at the markets at the moment. It's not really looking too good. Obviously yesterday we was trying to get long inside our order block. Right around here we got long. Price traded higher. We swept this level of liquidity, and this was my exit yesterday, right at this level. So that's pretty much what happened yesterday. We swept this level right here. That was my exit. So as we can see what happened today, just show you really quickly. So what happened yesterday, we swept it, and then coming into today we had this fair value gap set up. I've just added that onto the chart this morning as I've opened the markets, but this fair value gap is just right in between here. We had this fair value gap swept, and now it seems like our weekly order block is going to be held. So I was right in exiting my position. I would have usually taken off half the position, but given my experience I decided to take off the full half. So yeah, that's what's happened yesterday. So going into today, it seems like the market is still bearish, but one thing I want to tell you guys is the way I trade, I don't like to look for short positions inside our level of demand. So as of this current moment in time, I'm relatively neutral. Just from viewing the market, I'm relatively neutral. So yeah, that's that. Tested. So alright, so what can we expect to happen today? Alright, so the bias for the market is bearish, so we can switch this over to bearish. And with that, I'm going to be targeting our external lows, which is right down here. looks like that, targeting our external lows. Has our potential level of liquidity been taken? It hasn't currently, not at this moment in time. And because it hasn't yet been taken, we just mark that off as no. And that means this is not relevant. Market condition, we are ranging. No, we are trending. My mistake, we're trending. Now, this is still an important level of demand. And we actually have conflicting trading, we have conflicting analysis, because we have an area of demand right above our external liquidity. So I'm going to make a note of that. We have conflicting analysis, area of demand is directly above our level of liquidity. So I'm still going to mark on here important demand zone, directly above liquidity. Alright, so usually the reason why this is conflicting area of demand, and I just want to make you guys aware of this, is usually what's supposed to happen is we're supposed to have a bullish bias coming into this area of demand, and that's why I have drawn out this London session low. We're supposed to sweep this level, we're pricing it to rally back in there. However, we've actually respected this area, and we respected our fair value gap, and prices attempting to target our level of external liquidity. So this is conflicting because we've got demand that's telling us to buy, and we've got liquidity that's telling us to hold on till we target this level. So for that reason, this is looking like a no trade day. Conflicting, most likely a no trade day. So I'm just showing you guys how I usually approach the markets every morning. I want to have clear signals in regards to where the market's going. Yesterday it was clear we was approaching this demand area. I wanted to buy the market up. Today we've approached the demand area, but now we've got our level of liquidity resting right here, as well as this line right below. And I haven't mentioned this line. So this line above is our monthly order block, our weekly order block up here. This is our weekly order block. This line slightly below it, this line here, this is our previous monthly lows. So this is liquidity as well. That's a very important level on the chart, and this level of liquidity is right next to or right beside our external liquidity. So there's a potential chance that we're going to actually target this level of liquidity that's also being built up with all the liquidity here. And in case you can't see, I'll add this one as well. This is an order block. So there's a chance that we just come down to target this level. If that happens, we could potentially get a crash. And the reason I say that is because if for whatever reason price comes down to this level and breaches this fair value, this order block on the daily chart, we could crash down to further lower levels, but still find a way to close the month above this level. So anything under this level is a buy. In my opinion, this is where you want to try and buy the market at. Anywhere under this line, because we're going to use this previous monthly low as liquidity. So that's why today I'm most likely going to just sit on my hands and hope to see the market actually correct down into this level. If I was to take a trade today, it would have to be based upon, and I would have to reduce my risk substantially, but it would have to be based upon this area here being held and price rallying higher. So this is our London session low. I doubt this is going to hold, because this is the level that I was aiming to buy at. But okay, so we've got conflicting analysis. You've got conflicting analysis on the daily chart, on the weekly chart, on the monthly chart. So it seems like we're probably not going to take a trade today. If we do end up taking a trade, it's going to definitely be reduced risk, for the sole reason that the market should not be coming lower. If we was going to trade above this demand area, we should not be coming lower. So there's a chance that we're actually trying to target our external level of liquidity down here. Alright, so we also have Fed Chair Jerome Powell speaking.
It's just different.
Okay, so just a quick recap on our analysis for this session. So the market type today is bearish. That means market is more likely to go lower. Our external targets are the lows of the market, which is actually at this level down here. This is where we expect the price to go. However, we've got conflicting analysis, meaning that we're trending lower, but price is actually in a demand area. So we're not allowed to, in the system that I'm trading, we're not allowed to sell into a demand area or into a fair value gap. It's conflicting, so we can't take we're not likely to take a trade today in the downwards direction. So the only trade opportunity that we do have to take, if we were to take a trade, would have to be a buy out of the demand area into to rally much higher. And at this current moment in time, we have already swept our London session low inside demand. So this next level of liquidity right below it is our previous day's lows. For us to actually have a confirmed trade entry into this position, we need to see one more confluence, which would be we need to see this candle close green and shift structure to the upside, and that would happen at 3 o'clock or within the next 45 minutes after the open of the session. So at this current moment in time, we have conflicting analysis, so we're most likely probably not going to take a trade today in the current direction of the trend. That being said, if I do decide to get into a trade today, based on this sweep of London session low and this previous day's liquidity low inside this demand area, we have 3 confluences here, and we could target our London session high, which is right up here. If that does happen, it would have to be much less risk, so less than the usual amount of risk to take that position. So yeah, that's what we've got at the moment. Alright, so just once again, just a quick recap into our pre-market. We've got about 15 minutes until the market opens. This is our pre-market analysis, just going to fly through it really quickly. So our market type, we're bearish at the moment. We had a major market structure shift on Friday. Yesterday we were trying to buy the market from our level of demand. So now we held our weekly order block. So we're currently bearish at the moment. And our target is our external lows, which is this level down here. This is our target. This is where we're looking for the market to go to. Has external liquidity been taken? It hasn't. So at the current moment in time, we've got conflicting market conditions. This is when stuff like this occurs, we most likely don't take a trade on the day. What's the conflicting analysis? We're trending downwards, so we're in a downtrend, but we're trending into an area of demand which is directly above our liquidity area. That's this area right here. So we're not allowed to, as part of this system, we're not allowed to sell the market into demand. It doesn't make sense. You have to, obviously a demand area is an area where you buy at, so you can't sell the market into the demand. So our sell positions are taken off the table today. We're not allowed to take sell trades. That being said, because we are in an area of demand, we can look for positions to try and buy the market up. So what I've done, I've marked out our London session low, which is right here. We swept that in pre-market of New York. We swept that a couple of out, maybe 45 minutes ago. We swept that, and then we've also got our previous day's lows right here. Previous day's lows. So we've got our previous day's lows. We swept our London session liquidity. So if we can get one more confluence, which is for this to rally higher into this open of the session, if we can get this to shift structure on the next candle, we would be permitted to take a buy trade in an attempt to target this area here. And this is our London session highs, because if we're in a downtrend, we should majority of traders will be trying to short the market down. So at this current moment in time, we have opportunity to potentially look for a buy trade, but it would have to be for a reduced amount of risk. It can't be the full risk that we usually put on the table, because this is not a high probability setup. So that's what I'm looking at this current moment in time. The bias is short. The bias is supposed to be short, but because of the conflicting analysis, we can't take short setups at this current moment in time. It has to be a position long from our area of demand. So that's currently what I'm looking at the moment, and I aim to take this position once we get this hourly candle to close above here. That would give me confirmation that obviously the shift of structure on the hourly chart has begun, and then we could potentially see a shift of structure on the 4-hour chart, and that would constitute a further rally higher to try and get price to close above this area right here. And a close above that area would confirm our market structure shift on the 4-hour chart, confirm our market structure shift on the hourly chart, and then we'd have this candle turn green. We'd clear our order block. We'd have the momentum to rally higher and hopefully see a green candle close today, close above our fair value gap from yesterday, and we'd be confident that this market would be bullish. But at this current moment in time, that's not guaranteed. I'm going to be very patient and waiting for that. So that's what I'm looking at this current moment in time. Alright, so if we can get a close above our previous day's highs, and that's this white line here, if we can get a close above this line on the 15-minute chart going into New York session, I will happily take this trade. Going into New York Open, I will take the trade for two reasons. The first reason, and it's going to be a reduced amount of risk obviously, but the main reason is because we're in an area of demand, so this is a bullish area to buy at. Even though it's conflicting analysis, I'm permitted to put money behind the trade. Buying and demand is definitely permitted. Secondly is people who are bearish on the market and are ignoring the demand zone, they will be looking to short the market down from here. So this is where particular players have their stop losses. People who sold here, they sold here, they sold here. All of their stop losses are placed here. So this is the fuel that I'm looking to take out with my buy trade right here. So I'm gonna look to position within the next few minutes, as long as we get a close above this previous day's lows. If we don't, then I'll exit. Then I won't take the trade. So, and then hopefully when we get that close, we can see the market rally all the way up and start targeting our unswept levels of liquidity. If we do get that, obviously this will turn out to be a perfect place to position, because we're positioning inside a gap, positioning inside liquidity, and we're targeting so much levels of liquidity above. So that's what we're looking at this current moment in time. I'll let you guys know when I get long. And when I do get long, make sure that you don't get long straight away. You have to have your own analysis. Obviously the stream is delayed, so that's definitely something to keep in mind. Alright, so a green candle close above this area is going to be my entry signal. If the candle doesn't close green above this area, I'm not getting long. So we've got 5 minutes to see whether or not it closes green. If it does close green, I'll execute at the open, directly at the New York Open. I have a 100-point stop loss, and that will be the trade. Yeah, we're certainly seeing the market push down. It's not ideal for the type of trade we're trying to take today. So it's looking like a no trade kind of day. Yeah, I can't justify taking a sell trade in our area of demand. It's just not permitted within the system. So that's unfortunate. Unless we can get some sort of rally on the close, or maybe a rally on the next candle. If we get a rally on the next candle after the first 15 minutes of New York Open, we could potentially get long at that point. But currently, it's looking like a no trade day. It depends. We've got to wait and see how this market closes. I'm waiting to execute, get positioned on my phone, so it's a lot easier, and the price action is more accurate as well. Trading fees a bit delayed compared to my actual broker. Alright, seems like we're getting some buying pressure coming to the New York Open. Obviously, we've got just over 2 minutes to the Open. So if this candle closes green, I will get long on the Open. Pushing that down, so it seems like it's a no trade kind of day. Let's wait and see. We've got just under 2 minutes remaining. If you are going to take a trade today, definitely reduce your risk. You do not need to be trading at full risk. So yeah, definitely reduce your risk. Just over a minute till the Open. And if you're here and you're not subscribed, definitely hit the subscribe button and the like button. Push this out to other people. If you like the content, definitely subscribe. I'm here every single weekday, Monday to Friday, 8:30 a.m. Eastern Standard Time, which is 1:30 UK time. Alright, 45 seconds to the Open. If the market doesn't close green, then we wait for the next candle. If we get an engulfing candle, we get long in the next one. 26 seconds. This is usually where the buyers will come in. If they had the intent of pushing the market higher, they should come in within the last 10 seconds. Doesn't seem like there's enough for them, so we'll wait for the next candle. We need to see the market close above our area, our previous day's lows area. That's what we need to see the market close above in order to get long. And we're not taking any short trades inside this current spot because we don't sell into demand. Remember, you want to always wait for the close of a candle before you get into the trade. The data is not true data until the candle is closed. So we've got 15 minutes to decide whether or not we're going to get positioned into a trade today. Alright, so we're starting to see some sort of rally approach. We're rejecting our landing session low, which is always good, but we want to see the market close above the area. We don't just want to see a little bounce. We want to see a close, and that's why we're going to wait 15 minutes bare minimum before we look for a trade. If not, we call it quits for the day and we just wait for the market to set up a good A grade setup tomorrow or the day after, or whenever the market sets it up. But we're not in a rush to put our money on the table or put our money at risk. We want to take the best of the best setups. And as you can see, the market's just fluctuating. It's not really choosing a direction. This is proof that today is a no trade day for most people, because no one's committing to any particular side. Okay, so now, in the chance that the market does actually crash, where can we potentially look to buy? This is very important. So at this current moment of time, we've got external liquidity right here, and we've got our previous month's low right here, this line. At the previous month's low, we've also got an order block. So ideally, where we'd want to get long, if we were to get long, is we want to see some sort of market structure shift. As we approach this level, we're going to see some sort of market structure shift at that level. And if we get our market structure shift into this level after sweeping demand, we'd want to buy the market up from here and target our external highs up here. So this is the trade idea that we're looking at if the market continues lower. And it does seem like we've got quite some bearish movement today. The only opportunity you would have had to position short into this market would have been out of session. It would have been during Asian session. This is a fair value gap on the daily chart. This is our optimal area of entry. Unfortunately, it didn't fall within our window of time, so this opportunity to take this trade wasn't available to us, unfortunately. So that's why that didn't occur. And in regards to today and currently, we haven't had an opportunity to sell the market down, because we don't sell the market into demand areas. That's just not a part of the system. So the only real trade we could take is a buy in this demand area, and that has not occurred. As I showed you already, we've rejected off our previous day's high. So if we was for whatever reason to reject off here in the next 15 minutes, sweep this area of liquidity, and then So we'd come down like this, sweep liquidity at this area, and then rally back up. We'd be able to get into a long trade from here, but that is probably not the most likely outcome. It's definitely something I'm going to be watching out for, but I'm not going to be getting long into any trades unless we have a close above our previous day's high. So at this current moment in time, it's looking like a no trade day. No trade day.
It's just different.
One of the key things in trading you want to understand is, and I just want to let you guys know as well, Bitcoin's crashing. Most cryptos are crashing. Gold is holding flat, which is pretty good, but everything seems to be dropping. I just want to let you guys know, these are the days that, make or break someone's account. You want to know the days where you don't want to trade, and today's one of the days you don't want to trade. The reason I tell you that is because, firstly, it should be against everyone's system to sell into demand. What you want to do, you want to wait for the market to break below, close below, and then inside a fair value gap or demand area, whatever, you want to try and sell the market after you close below it and use that as previous resistance, previous support turn into resistance. But what you don't want to do, you don't want to sell inside the demand area. And what's most likely going to happen today, after we close this gap, I assume, we should see some sort of buying pressure come back into the market. The reason that happens is because inside the demand area, you find liquidity throughout the entire demand area. So you might find some liquidity at this level. You might find some liquidity, slightly below it. You might find it over here, or you might find it right here. As you can see, there was pressure here, there's pressure here, there's pressure here. Where's the next level of pressure going to come from? No one actually knows. All we know is that this entire area is being looked at by institutional traders. So it's very, very important that you avoid taking trades into our area of support, and our demand areas are area of support. So at this current moment in time, we're waiting to see how far down this can go. As I said already, if we get a rejection here and we get a close above this area, what I want to be looking out for actually is to see whether or not we can get a close above here on the hourly chart, and if that happens, I can justify taking a buy trade. But it'd have to be above this level right here to confirm a market structure shift on the hourly at the bare minimum. So that's what I'm looking out for at this current moment in time.
It's just different.
I'm away, I'm away, I'm away. We are so late. Before your love fades, trust me,
Alright, so we've been unable to actually see any meaningful buying pressure come back into the market. The market just continues to decline. For me today, I told you guys already, it's a no trade day. You have conflicting analysis. We've got the market trending lower. However, we've got an area of demand which is right above our external level of liquidity. And due to this conflicting analysis, this area right here, I'm not permitted to take any trades into the downward direction. I'm not allowed to sell into an area of demand. Same way you don't buy at resistance, you sell into resistance, and you don't buy into support. I mean, you don't sell into support, you buy into support. It's the same thing in the situation. It's a conflicting analysis. So unless we get a massive push up and a close over the next, I should say, hour to get us to close above here, it's most likely going to be a no trade day. But it's better because the further down we go, the better opportunity we have to buy the market back up on the reverse. So I'm going to be watching quite carefully to see whether or not we get a crash today, and I'll be monitoring this area of liquidity, which is actually our monthly level of liquidity, and that can be seen. This is the monthly chart, this is our previous month's low. So once this level gets swept into order block on the daily chart, this should provide us a great area to buy the market back up. But as of right now, it's just not looking good in terms of the buy trade. As we see in the market's just falling off a cliff. So yeah, that's what we've got at the moment.
It's just different.
I mean, it's perfectly fine to not take a trade today. Obviously, a lot of people would be upset that they missed a bit of a 300 pip drop. For me, it's not really that deep. You know, you can't catch every single trade. What I do want to say though is, if we do get some sort of a rally, no, it just doesn't seem like we're going to take a trade today actually. Because even if we do get a rally, we need the market to close above here. And I don't know, I just don't see it happening. At least we could say we've closed the gap, but the market's got a lot to do for it to close above here from where we currently are. So it seems like it's going to be a no trade type day, just to avoid putting any money at risk. losing any money. Yeah, as I said already, we don't sell into demand, so that's why we're not positioning short. Which I think is pretty reasonable. Let's take a look at the Nasdaq. Yeah, so we had a bounce so far. Yeah, all the selling took place during Asia, so I can't tell you guys that we would have been able to get involved in any of these. Let's see what gold's like today. Yeah, it seems like it's going to be a no trade type day. Gold actually just swept London session lows, so maybe you might be able to take a position on gold if you're from this current moment. This is actually a buy trade. I'm not going to take this trade, but this is actually a trade you could take. To them highs is about 2.5 to 1. That's a decent trade. Let's see, US30 is actually moving back up. Let's see if we end up gathering the momentum to close this candle green. If we do get the momentum to close this candle green, I will be getting long. I'm talking about a green close on the hourly chart. That would be a great indication of buyers coming into the market. As I said, you don't want to ever sell into demand, and this is exactly the reason why, because you get buyers at different levels within the demand zone. So in case you're unaware, in case you can't see, we had some buyers at this area, we had some buyers at this area, we had some buyers here, we're getting some more buyers here. You just never know when the buyers are going to come in. It's just not feasible to be buying inside demand. So that's pretty much the reason why I'm not looking for sell trades. I am looking for buys, but this candle really needs to push all the way up, get us back above, at the bare minimum, back above our previous day's lows, which is this one. This is our previous day's lows, and if we can get above our previous day's lows, I would be happy to take the trade, because at least it would be a green candle, and then hopefully the candle after that could get this to turn bullish, and then we see quite a bit of momentum on the 4-hour chart as well, and this would satisfy a previous market, a higher low in the markets. So still a lot for the market to do, so I'm just going to be patient, sit on my hands. We do have Jerome Powell speaking at 5:20 GMT. We've got that news later on today, so maybe the market's going to be a bit patient in awaiting Jerome Powell's speech, but I'm not exactly sure what he's going to talk about as well, to be fair, but we've just got to wait and see. Alright, so given the fact that we've had so much weakness going into what we're seeing a bit of a rally again, that's what I'm talking about. Inside the demand areas, you have various areas of just buyers come in. Let's actually just wait. Let's wait the final 7-8 minutes to see how this candle closes. Maybe we do have an opportunity to get long. If we do see the hourly chart get above our previous day's highs, I will be looking to get long. But I was about to bring my day to an end, but I saw an influx of volume, so there is still a chance that that we close green and we get a market structure shift on the hourly chart. If that happens, we could see a higher low put in here. We could see the market continuous rally from our area of demand. And this would be proof to you guys as to why you should never ever look to position short inside a demand area. However, if we don't get the rally that I'm looking for, then in the next 5 to 10 minutes, then I'll just call it quits for the day. Let's just wait and see. Alright, so we're seeing another push in price. Seeing another push. Is it going to be enough to get us bullish? I completely doubt that. But you never know what happens. The last 5 minutes of every candle is always the most aggressive, because that's when institutions are trying to make their mark. So let's see what happens over these next couple of minutes. This is going to be the most important part of the day. If we can get a green candle close on this candle, if we can get this candle to close above our previous day's highs, which is this candle right here, we should be able to see the market begin its ascent. Another reason why you should never ever buy, you should never ever sell into a demand area. It is not ideal. But as you can see, we're beginning to see some buyers really come in. As I told you, institutions are really trying to make their mark now. Hourly chart has really completely changed its tone. So I'm going to be getting ready to position on my phone. Let's take a look. We haven't got too long yet. Let's see, can we get above our London session low? Hourly chart's looking really good, just need to turn green. Let's see. Yeah, the hourly chart's really showing intent. But we're struggling at the previous session lows, London session lows, struggling to get above there, but that's not a problem. We still have about 3 minutes to see how this candle closes, so it's not completely over. Alright, now we're turning bullish. see some intent. Oh, we have a little bit of a rejection, which isn't great. I think if we can get a close green on the hourly chart, if we can get a green close on the hourly chart, I think I'll be willing to take this buy trade. Right, hourly's beginning to look good again. Have we turned green yet? The market above this area. I need it above there. Alright, we've just got just under 3 minutes. I think the hourly's just turning green. Let's see if we can get some more intent from the institutions over the last couple of minutes.
It's just different.
Got back onto the 15. See if we can get a big push into the close of this candle. I think given the size of this candle and the fact that we're closing above our liquidity area, I think I'm gonna get long on the close of this candle. But it would be slightly better if we could just get the close above here. But you know, I think I'm willing to put money at risk for this. Alright, I'm gonna get positioned at the close of this candle. Buy a trade with 100-point stop loss. Pretty simple. Hourly charts turning slightly bullish. Regardless, I'm gonna get long. Reduced risk, of course, can't be normal amount of risk, has to be a reduced amount of risk. Alright, I've just executed long. 100-point stop loss. This is my one and done trade for the day. Bare minimum target here. Yep, seems that we don't have the momentum, so let's just see how this plays out. But it's looking a bit weak at this current moment in time.
It's just different.
It's a bit of a struggle at the moment. Which is understandable, like the market is in a bearish trend. So unless we could put in a higher low, we're not likely to go higher. It seems like we're just getting rejected. Yeah. Can we get some momentum? Alright, can we get a bit of a push? Let's see if we can get a bit of a push. Alright, we're starting to push a little bit. And there we go. Profits are running. I'm only looking for a 2-to-1 on this trade. I don't need to take more than that. We do need to see the market get above this previous day's low to confirm our bullish momentum. So if we can do that comfortably, we should see the market begin to rally aggressively. However, if we do fail, that would be very, very bad. It's not looking great. We're struggling. We need to see the momentum really fly in here, man. Let's get some momentum.
It's just different.
Yeah, I have to say the sellers are really showing their strength really at the top of this order block. So just gonna let the trade continue to run. I advised everyone, regardless, to take this trade with a reduced amount of risk. So that's definitely what I've done. It does look like the sellers are very much still there. But as we already know, the data is in the close of the candle, not in the current moves of the candle. So I'm going to continue to wait to see how the candle closes. Alright, getting some more of a push as expected. If we could just break this level, we should be free. We approach a level we reject. Let's see, can we get the momentum to come in? A couple of pips to break it. Got less than 5 minutes till the candle closes. Let's see if we can get some momentum to come in. The hourly chart should already be bullish, which is good. Now we just need follow through, and then the idea would be that we'd get a close above this candle, and that close would confirm the hourly turning bullish. That would also confirm this being a higher low, and then we could potentially see the market have an aggressive rally into the close today, turning back bullish. But we first need to get this candle to get above this current level, and we seem to still be struggling to break it. Still struggling to break it, but we haven't got too long now, so it should be a bit easier sailing as we approach the final couple of minutes before the candle closes. Smoother sailing. And there we go, the intent's really beginning to kick in now, as expected. There we go, there come the balls. Alright, so it's important that we get above this area, get above this zone to close. This is what I'm waiting to see. I need to see that this candle close above this level 809. That's what I need to see at the moment in time. Because if we don't close above there, then there's a chance that we're holding this area, and it's not good to be holding this area. This demand area should cause a reaction in price to just fly through. So we need to see price, close above that 809 area, and it looks like we're just about doing that. Less than a minute left. We're seeing the intent come in. Around 20 seconds left till the candle closes. Alright, on this next candle, I want to see it just break free completely. I don't want to see any rejection back into the gap. I want to see it break through completely. Alright, so I'm up about 1R, not sure if you can see that, but I'm up about 1R in this position. I'm only targeting 2R. For some reason the market can't get above this area, so there's a chance I'll just close out at 1R. I'm not exactly sure why we're rejecting it, but hopefully we should see some bulls really coming now. Alright, so we're really beginning to move now, and it's approaching my target. I'm up about 1.5%. So yeah, this is why you don't buy in demand areas ever. I mean, you don't sell in demand areas ever. You always want to buy in demand. So yeah, I'm actually just gonna place a take profit, so this can get me out of the trade by itself. So I believe the hourly's turned bullish. The 4 hours put our higher low in. So we're gonna need to see the 4 hour really turn bullish and ramp up to confirm the higher low. We've also got our daily chart, which has swept our previous lows into demand, so we should be good to rally. And this rally should target our external liquidity at the highs. So I was bullish yesterday. I took a little position off. I usually would have held it. The reason I got out is because of the order block. We ended up rejecting the order block and coming back down into demand the second time. So now we should have the momentum to just take this all the way up. So yeah, I'd advise you lot, if you want to hold it to the all-time highs, definitely hold it, but take some off the table so you're comfortable holding the position. That's the main thing you want to do. Alright, we're beginning to approach my target, so as soon as we hit the target, I'm going to call it quits for the day. It's not too bad. Not too bad at all. And this is wrong. This is supposed to be 200 pips. So this hasn't actually hit on my phone. I think on my phone I've got slightly higher take profit, so it's not quite there. I think we should just call it this area here. I think that's as similar as it's going to be. Alright, we're getting a push. What reason would we have to reject? If the market didn't want to turn bullish, I guess that would be a reason to reject. If we go back to 1-to-1, I'm going to exit the trade. Because that's not a good sign. We shouldn't be seeing the market reject at this level of liquidity. It should really just fly through it. So what I'm going to do, I'm going to take off my risk, break even, stop loss at break even. And I'm gonna end the stream here. Hope you lot found value being here. As I told you, you don't ever want to sell into areas of demand. It's just a recipe for disaster. But yeah, hope you found value in the content. Catch you in the next one.